Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about USDCAD. Now, why did I choose to speak specifically about USDCAD? Well, because at the moment on it, we have quite interesting price action and structure for a potential opportunity. So as usual, I will be performing a complete top-down multi-time frame educational analysis. First, I will be speaking about what we have from a technical perspective. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what the non-commercials in the market are doing, which are the hedge funds and the biggest speculators. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential trading opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we can clearly see that at the moment the market is testing extremely strong monthly demand. In fact, from here, all this move to the upside was created. The market once again here tested this zone and got rejected to the upside. And we can see how at the moment the market is testing this exact same demand and support, from which there is definitely the possibility to see the market provide a rejection to the upside. We can also see that in all this impulse to the downside, there is one candle which is not related to the move, which is exactly this green candle here, meaning that here on the monthly time frame, there is definitely the possibility to see the market provide a move to the upside to go and test this level. Because this is just something that in general applies in the market. If you have a strong impulse and one candle is of a different color, that is quite strong supply. And you do expect the market to go and test that supply to see what kind of liquidity there actually is inside of this zone. Meaning that this green candle that we have here, inside of this impulse to the downside, should be acting as a magnet for the price, and we can expect the market to go and test this zone. So here in the monthly, everything is quite clear. We do expect the market to provide a rejection to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly time frame, we can see how the market has just provided a quite strong impulse to the downside. Now in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, what we can see is that we have at 0.382 of the Fibonacci taken on this weekly impulse, which is currently lining up exactly at this area that we do expect the market to provide a correction to. This is the first target to the upside that we have here for USDCAD. We want to see the market reach at least this area. So at the moment, everything is clear, monthly and weekly, both indicating for a potential move to the upside. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Let's go down on the daily time frame. Now, here on the daily time frame, the price action that the market has created is quite clear. First, we can see how the market was creating this horizontal accumulation phase, basically showing a deceleration, and then the market broke above this structure. And we have spoken about the fact that the market had broken above this previous resistance turn support. And from this level, we wanted to see the market provide a rejection to the upside. And in fact, that is exactly what the market just did here. But we can also see that we just had another break of structure. And by the way, I will link that previous analysis in description so you can go and check it out for further reference and more free education. Now, as I was saying, at the moment, the market has broken another structure area, which is basically this previous daily resistance, which now that the market has broken it to the upside is turned support here. Meaning that in this area here, we can expect the market to provide quite interesting price action on the lower time frames for a potential move to the upside and a nice longing opportunity. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing, we can see that in the long term, definitely net positions have increased. We went from having 2.4K net positioning all the way up to having 45K net positions with 80K longs and 35K shorts. However, we can see how with the last report, net positions have started decreasing. Why? Because the shorts are finally starting to get closed, but at the same time, also the longs are getting closed. Actually, more longs are getting closed than shorts. What does it mean? It means that in the long term, hedge funds are not really interested in the move to the upside. Otherwise, they would be adding shorts on the CAD, which, as we can clearly see, they're not. But we are starting to see some profit taking on the massive longs that they had on the CAD, which means shorts on USDCAD. So that is why this downtrend currently is showing a correction. And here on the weekly, as we have already seen, we can expect the market to provide a correction at least to this area before the market can then, in the long term, possibly start a continuation to the downside. But at least we want to see the market provide a correction to this area from a weekly perspective. So there is definitely the possibility to be looking for a potential longing opportunity. So how we will be approaching that? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower inside of this area. And we will be waiting for the market to shift from an intraday bearish market from a 4-hour perspective to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding USDCAD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the weekly impulse. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.